Hi guys, this is Forex with Temilo and you're welcome to my YouTube channel. In today's video, I'll be using the GBP JPY as a case study to show you how you can take profitable trades in the foreign exchange market. Let's dive right into it. As you all know, when you want to get into a trade or before you get into a trade, you want to do like a top-down analysis, which is for you to go from the higher time frame, usually from the daily or from the 4 hours time frame, to check out for the market structure. So looking at this pair from the 4 hours time frame, you can see that market has been pushing all the way up. So we are in a buy trend. So and the best way to trade is to follow the trend. If the market is going bullish, then you should be looking for buy setups. If the market is bearish, you should be looking for sell setups. Though there are situations in which you can go against the trend, because of course if a market is going up, there will be times when there will be reversals before pushing up again. So but it's best to follow the trend. So as we've been able to identify that the market is pushing up, breaking structures, all you need to do is look for demand zones or areas with imbalances that you can get into buy trades. So if you were on the chart on this particular day when market was pushing all the way down here, you can see that we were kind of grabbing liquidity below lows. From here, market pushed all the way up there and market came aggressively down, taking out this low, last low as well. You might start to think, are we shifting bearish because zones are being broken? Sometimes when you see structures like this, it might be that market is trying to grab liquidity before pushing up again, and it might be that we are actually shifting bearish. But as you can see yet again, when we push all the way down, market left behind this level of supply with imbalance right there. So seeing this on your chart, this is a good way to look for buy setups, because market needs to fill up this imbalance and this supply zone. Okay, and looking to the left, for me, when I see price pushing down like this, I will always look at the left to kind of see, okay, which area is likely for price to get to and stop and reverse back. Okay, and looking to the left, this area of demand with imbalance was the perfect area to look for opportunities. So like I mentioned earlier, once this was broken, we can kind of say probably the market have shifted to a bearish trend. But in order to be sure of this buy setup, in order not just to get into it blindly, because market can decide to do this and break that zone. Okay, so all you need to wait for is a confirmation entry from this zone. And of course, because this particular low was broken, I will not be looking to trade the market all the way back up here. Okay, because we never can tell if the trend is about to change, because we've taken out this low that gave us this last high that we can see in the market. So in order to be sure and not just get to trade blindly, we need to wait for confirmation entry from this level. So right now I will play this, and as you can see right there, market tapped into this our zone, filled up the imbalance, tapped a little bit close to the demand level right there, and from there we can see a push up to the upside. So if you are a trader that wants to go aggressive, then this is the aggressive buy entry to take the market back up into this level of supply right there. Okay, so but because this low was broken and we are not sure if markets will continue down, we can then wait for a confirmation entry. So now let's move to the lower time frame, the 15 minutes time frame. So as you can see, when market dropped into this our entry, now for those that got into early buys from here, you will notice that they became liquidity. Their stops were entered right there because this low were set of equal lows right there. And if you look to the far left as well, you can see that this is a set of equal lows that markets used and grabbed liquidity. And probably if you have a stop loss at this low this week that came down to mitigate this zone properly, would have used you as liquidity grab. And from here you can see the market pushed all the way up, breaking the previous high that pushed us back into this low. And now this is our confirmation. A break of structure has now occurred. So whenever we have a break of structure, you need to wait for price to come back down in order to mitigate new imbalances that we may have in the market, or what we call fair value gaps in the market. Let me go to the 30 minutes. Okay, so as you can see on the 30 minutes is more clearer. So usually I will look for entry opportunities from the 50% of imbalances right there, because there are times that markets will not exactly get into this last fill of the imbalance. So the 50% usually I will go with that and set a buy limit. And for your stop loss, you want to have your stop loss at the swing low, the last low that pushed and broke above the structure. So, and where will your target be? Remember from the from the 4 hours time frame, we can see that we have this area of imbalance with supply zone. So our target will be for this zone right here, and we can head back to the 15 minutes time frame. Okay, so now we are in the trade when market came here, and not just that, we can see that the previous Asian range low was grabbed. The previous one here was also grabbed, and we tapped properly, went up to break structure, and from there market started pushing up. So yeah, okay, the market is yet to eat. So this is how you look for profitable trades in the foreign exchange market. So you want to look for zones like this where there are imbalances, where there are demand levels that were unmitigated, and you want to wait for market to take out liquidity first before getting into your trade, or wait for market to tap into areas where the Asian range lows, Asian range highs are yet to be taken. So this is how to take profitable trades in the foreign exchange market. Though there are sometimes market might not come back to give a confirmation entry, but it's better to wait for confirmation entry, especially when your points of interest has probably a large stop loss from your entry. So you can wait for confirmation entries in order to get into those trades, so that you can maximize your risk to reward. So that is it, guys. I hope you found this video helpful. Till next time.